Silver just did something it hasn't done in 45 years, and if you're watching this video right now, you need to understand what happened in the last 72 hours. On December 17th, 2025, silver hit 66.52 per ounce, an all-time high that shattered every resistance level dating back to 1980. But here's what nobody's telling you. This is not just another precious metals rally. This is a complete structural breakdown of a market that Wall Street has controlled for decades, and the people who've been shorting silver are scrambling to cover positions that are bleeding billions. I'm going to show you exactly what's happening, why Google News is exploding with silver headlines right now, and what you need to do before this information goes mainstream. Let's get into it. So why is silver suddenly dominating financial news feeds? As of December 18th, 2025, literally today, spot silver is trading around $65 to $66 per ounce. That represents a 100 to 130% gain year to date from where we started in January at roughly 30 Hotassers to $32 per ounce. To put that in perspective, silver has more than doubled, while gold is up about 50 to 60%. This is the single best performing major asset of 2025, and it's not even close. But the real story broke over the past few days when Kitco News published an interview that sent shockwaves through the precious metals community. Maria Smirnova, she's the chief investment officer at Sprott Asset Management, managing billions in precious metals investments, just went on record saying that silver's supply problems remain completely unresolved and prices should go higher before they retreat. In her own words, she said, after 5 to 7 years of deficits, we're finally seeing the effects of that translate into price movement. Here's the thing you need to understand about what's actually happening in the silver market right now. For the past 5 to 7 consecutive years, global silver consumption has exceeded mine production every single year. According to the Silver Institute's projections, total physical demand for 2025 is expected to exceed 1.2 billion ounces, while global mine production is only around 835 million ounces. That's a deficit of roughly 365 million ounces in a single year. Maria Smirnova from Sprott broke it down even further in that Kitco interview published just days ago. She said, and I'm quoting directly here, if you look at mine supply over the last 10 years, it has declined around 80 million ounces. Now, total supply is about 1 billion ounces, so it's a very small market. And when you say that we're losing supply over the last 10 years, that tells you we're not finding and building new silver mines. Think about what that means. The market isn't replacing what it's consuming. It's been running on stored inventory, the silver that was sitting in vaults from previous decades, and now those vaults are running empty. Wait until you see what happened to the London silver vaults. According to multiple sources tracking exchange inventories, London's LBMA vaults, that's the London Bullion Market Association, where most of the world's silver is supposedly stored, have been experiencing what experts are calling a historic squeeze. Some metal was shipped from London to New York earlier this year because of fears over tariffs. At the same time, as ETFs have grown, they've locked up available silver in London as well. But here's where it gets absolutely wild. Mike Maloney, you might know him from his Hidden Secrets of Money Hunt series, just released analysis showing that silver lease rates are now higher than platinum's. One market insider told him directly, nobody's got silver. Lease rates are 20 to 30% if you're lucky enough to find a lender. Let that sink in. Banks that normally lend silver to each other for fractions of a percent are now charging 20 to 30%. That's not normal market behavior. That's panic. If you're still watching right now, do me a quick favor. Smash that subscribe button so this information keeps coming to you daily. Most people who watch this channel end up thanking themselves 6 months later when they understand what's coming before the mainstream catches up. Plus, YouTube's algorithm only shows this to more people if you actually engage with it, so hit that like button too. Now, here's the angle nobody else is covering, and this is absolutely critical to understanding what's about to happen next. According to reports from multiple Chinese sources close to the Shanghai Gold Exchange and Shanghai Futures Exchange, a massive buy order for 400 million ounces of silver, that's equivalent to 12 ounces or 141 tons, was placed in recent weeks. To put that in perspective, that's nearly half of the entire world's annual silver production in a single order, worth approximately $22.3 billion at the execution price. The sources claimed this was a short seller desperately trying to cover positions after a key resistance level broke. The buyer reportedly offered a price 3 to 4% higher than the previous close just to get their hands on physical metal. And here's what happened next. Trading robots, these high-frequency trading algorithms that execute in milliseconds, all started buying simultaneously because they are programmed to cover shorts when resistance breaks. The buying pressure became so intense that CME officials had to shut down the servers to halt the surge. They literally had to stop electronic trading and bring in human intervention to regain control. So who placed that $22.3 billion order? According to detailed analysis of Chinese precious metals trading infrastructure, the most likely candidate is China Chengtong Holdings, and specifically their precious metals division, Chengtong PM. This is a state-connected entity that designed and established the Shanghai Gold Exchange. They manage everything from mine production to final distribution in China. Their clients include major mining companies, refineries, China Gold Coin Corporation, the People's Bank of China, and various government agencies. Here's why this matters so much. Unlike Western countries that have tried to minimize silver's monetary role, the Chinese government systematically links gold and silver together in official policy documents. A government directive published on June 23, 2025, instructed all ministries to develop mineralogical research, reopen exhausted mines, and improve refining techniques specifically for precious metals. Why would China do that unless they're planning to let prices rise significantly? They're positioning themselves ahead of a monetary transition, and they're doing it openly. Now let's talk about what's happening in the paper silver markets, the futures contracts and ETFs that most investors interact with. Mike Maloney, his recent analysis revealed something shocking. Borrowing fees for SLV shares, that is the big iShares Silver Trust ETF, exploded from a typical 0.5% to over 12%, with 0 shares left available to borrow. That's a 24x increase in borrowing costs. When you can't even borrow shares of a silver ETF, what does that tell you about the underlying physical metal? Meanwhile, backwardation, that's when spot silver trades higher than futures contracts, reached levels never seen before. At one point, during the October volatility, spot silver was up $1.40, while the front-month futures contract only rose 20 cents. That disconnect tells you everything. Investors want real physical silver now, not a promise to deliver later. When markets shift from promises to possession, the paper side starts to disintegrate. All right, I want to know what you think right now. Drop a single word in the comments. Type a silver if you believe we're going over $70 per ounce in the next 60 days, or type gold if you think gold hits 5 figures first. I literally read every single comment, and it tells me exactly what to cover in tomorrow's video. Plus, the more engagement this video gets, the more YouTube pushes it to people who need to see this information. So take 5 seconds and drop your prediction right now. Here's a problem that's making everything worse. Even with decent mine output, refineries are absolutely choking on demand. According to Mike Maloney's sources, backlogs are running 4 weeks or more. That means there's plenty of raw silver and doré bars coming out of mines, but not enough refined metal to meet investor demand. This bottleneck limits supply of coins, 10-ounce bars, and 1,000-ounce wholesale bars, basically the backbone of both retail and institutional markets. Maria Smirnova from Sprott confirmed this in her Kitco interview, explaining that a big silver mine produces between 10 and 20 million ounces annually. She emphasized, there's not that many mines like that, and we've not had new mines like that at all, really. And in the last 10 years, we've lost 80 million ounces of supply from mining. That's a handful of big mines that we need to replace. But here's the kicker. It takes 5 to 10 years to permit, finance, and build new silver mines. This isn't something that gets fixed in 6 months. The supply shortage is structural, and it's getting worse. So what does all this mean for you specifically? First, understand that we're not talking about speculation anymore. The Silver Institute's data shows industrial demand is hitting records. Solar panel manufacturing alone is consuming over 200 million ounces annually. That's 20% of total global supply. Electric vehicles use 25 to 35 grams of silver per vehicle, and EV adoption is accelerating. The electronics industry consumed approximately 268 million ounces in 2022, according to the Silver Institute's World Silver Survey. And that number's only grown with AI data centers and 5G infrastructure. This is industrial consumption that doesn't care about price. These industries need silver's unique electrical conductivity properties, and there are no viable substitutes for most applications. When you combine that inelastic industrial demand with investment demand that is now flooding back into the market, Smirnova mentioned over 100 million ounces went into Western ETFs just from January to November 2025, you get a market that's structurally broken. Sprott's technical analyst Paul Wong is calling for $60 as the first stop, then $63. Another analyst they follow, Michael Oliver, is predicting $100 to $200 in the next few quarters. Even if you think those targets sound crazy, consider that silver's already at $66 as of today, December 18th. The first target's already been hit. Now, let me give you the counter-argument because you need to hear both sides. In October 2025, silver experienced a sharp correction, dropping over 10% from multi-year highs above $54 down to around $48.96. It fell 8.7% in a single day, the worst one-day performance since 2021. This volatility is real, and it's something you have to expect with silver. The correction was driven by profit-taking. a strengthening US dollar, and general risk-off sentiment. Silver is notoriously more volatile than gold, with bigger percentage moves in both directions. If you're thinking about getting into silver right now at all-time highs, you need to be psychologically prepared for potential 10 to 20% pullbacks. These are not signs that the bull market is over. They're just part of how silver moves. Also, be realistic about the billions lost by banks narrative. While it's mathematically true that institutions short silver lose money when prices rise, some analysts estimate losses around $272 million per dollar increase. There's no verified evidence of any major bank reporting multi-billion-dollar losses, specifically from silver positions. Banks hedge their exposures, and these aren't naked one-way bets. The real story is supply deficit, not revenge against Wall Street. So here's your action plan. If you want physical silver exposure, focus on recognized coins and bars from reputable dealers. American Silver Eagles, Canadian Maples, and generic rounds from established mints give you the most liquidity when you eventually want to sell. Expect to pay premiums over spot price. That's normal, and it reflects the physical shortage. If you want exposure without storage concerns, look at silver ETFs like SLV or PSLV. Although understand that Sprot's PSLV is structured to hold allocated physical silver, which some investors prefer. For leveraged exposure to silver prices, mining stocks and silver streaming companies benefit when silver prices rise. Companies like Pan American Silver, First Majestic, and Wheaton Precious Metals get mentioned frequently in analyst reports. But here's what's critical. Don't chase the move at all-time highs with money you can't afford to lose. This is a volatile asset that could pull back 15% next week and then go up 30% the following month. Dollar cost average if you're building a position. Buy a little bit consistently rather than trying to time the perfect entry. Look, here's what we know for certain right now. Silver is trading at $65 to $66 per ounce, after more than doubling in 2025. Supply deficits have persisted for 5 consecutive years. Industrial demand is breaking records. London and COMEX inventories are at critically low levels. Chinese entities are placing massive orders that freeze markets. Lease rates have exploded to 20 to 30%. And major institutional investors like Sprott are publicly stating that supply problems remain unresolved and prices should go higher. Maria Smirnova said it perfectly in that Kitco interview. The cat's out of the bag, and it's been building for a long time. This isn't about conspiracy theories or revenge squeezes. This is about a small market, roughly $60 billion annually. At current prices, that's experiencing structural supply stress while industrial and investment demand simultaneously surge. Whether silver goes to $70, $80, or eventually $100 plus, like some analysts predict, the setup is unlike anything we've seen in decades. Mike Maloney's 45-year cup and handle pattern has completed. The fundamentals are undeniable, and the mainstream is just starting to notice. So here's my final ask. If this video gave you information you're not seeing anywhere else, if it helped you understand what's actually happening in silver markets right now, subscribe to this channel and turn on notifications so you don't miss the next update. This story is developing daily, and I'm tracking every data point, every inventory report, every analyst interview, so you get the information first. Drop a comment telling me if you're buying physical silver, stacking more gold, or staying on the sidelines for now. I genuinely read every single one, and it helps me create content that actually serves you. And if you know someone who needs to see this, someone who's been sitting on the fence about precious metals or who thinks they missed the move, send them this video. They'll thank you later. The 2025 silver revenge squeeze is real, not because of some coordinated short squeeze by retail investors, but because the physical metal genuinely isn't there anymore and the market is finally waking up to that reality. Now you know what the big players know. What you do with that information is up to you.